Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. A wild week so far in the markets, my friends. The sell-off, who saw it coming? Money Mander did. He's been talking about it for the past month now. Congrats to him. We'll get to that later on in the show. Important to note as well, guys, today's show is powered by TrendSpider. We are very, very excited to have partnered with them. So all of the charts that you see throughout the duration of this episode of Beat the Bell, they're TrendSpider charts. So if you're interested in joining TrendSpider, if you like what you see, you can use our link there for 25% off. But let's get into it, guys. Let's introduce our panel, starting with Coach Dipka. Good morning, Coach. How you doing, brother?
Hey, good morning, guys. Excited to be here. Let's get after it.
Money Mander, what's going on?
Good morning. And let's not say a month here, right? Because then I sound like the perma bear. But we were about 3 days early on this one.
I mean, if not a month, at least 3 weeks, brother. You don't realize how often you're talking about this short trade, but everybody else does. It's a good thing, though. Look, you're in a pretty good position now. So don't worry about it. Don't beat yourself up. All right, Noah.
What's going on, guys? Like Alejandro said, crazy couple days in the market. We have a lot to cover, so it's going to be an exciting show.
Absolutely. All right, Ramsey Rippers.
Good morning, guys. Great to be here. Listen, I got some breaking news that I need to break on this show on Beat the Bell live time. Never before seen before. I got to see my man Noah, his reaction to this breaking news. Aaron Judge.
Yep.
Back in the Bronx. Right. 9 years, $360 million. Congrats, my man. I know this was big for you.
We love that. We love that. That just made my entire day. I could go into the market, make an absolute fool out of myself, lose a couple of G's, but Aaron Judge is going to be with the Yankees for the foreseeable future. That made my day. That made my month. Made my week.
He's back. All right, my man. Let's go. Let's have a great day.
This guy just woke up to $360 million, and we're about to go to war trading SPY, but it's all right. Who else we got? Stock Sniper, last but not least. What's going on?
Good morning. Let's make some money today.
Absolutely. All right, guys. So we're first going to start the show with our Fed forecast, and for that, we're going to bring in our macro experts, Noah and Money Mander. Let's hear it, fellas.
What's going on, guys? So like we talked about on Monday, this isn't the most busy week in terms of economic data. So we had today anyways, non-farm productivity come out, as well as unit labor costs. Non-farm productivity came in a bit over expectations. It looks like 0.8% versus 0.3% expected. And then unit labor costs also came in a little bit light with a 2.4% read versus 3.1% expected. So not crazy out of line there, pretty much in touch with consensus. I think what the market is really looking at, obviously, is going to be that PPI on Friday, the CPI next week, and the Fed interest rate decision next week. But we've actually gotten some pretty interesting data over the past couple of days and an interesting market reaction to that. So if Ryan wants to throw up the chart, from yesterday, we really just saw a tremendous amount of weakness in the market. And we saw this exact same thing on Monday, right? And so Tuesday, we got a wider than expected trade deficit. Exports are falling due to weak global demand, reigniting fears that a strong economy may eventually force the Fed into more hawkish positioning than they're in right now. So along those lines, Goldman has actually revised GDP estimates up to 1.8% year over year versus the previous 1.4% estimate, right? So this introduces some right tail risk that the Fed comes out at the December meeting and decreases the size of the rate hikes like they've been talking about in their forward guidance for the past month, right? Going from that 75 basis points to that 50 basis point hike, but they could signal an intent to continue hiking in smaller increments longer than previously anticipated, right? So you contrast this with the less tail risk that investors were presented with in October and November, when you had the chance that the Fed could come out and be less hawkish than anticipated, right? We had Jerome Powell come out at that economic conference. He wasn't ridiculously hawkish, market immediately rips, right? That type of thing. I think that right now you're looking at a situation where everybody has sort of priced that part in. Okay, we're going to decrease the size of these rate hikes. They kind of understand where the Fed stands right now. The risk now becomes, okay, what do they do if they really want to stop or at least slow down this economy, which has proven to be so strong over the past couple of weeks, right? With the data that we've gotten, whether it's the jobs data, whether it's the data that we got on the trade deficit yesterday, we just continue to see this strengthening of the U.S. economy, and people are a bit worried that if that continues, it's going to give the Fed the green light to be more aggressive in 2023 with respect to inflation and interest rates.
Yeah, we're really at this position that we kind of talked about on Monday where it's a lot of unprecedented events here, right? And so I think a lot of people are starting to price in that if the economy is still remaining strong after unprecedented hikes, we're getting quantitative tightening every month now. What really can they do to further push this narrative and try and slow down the economy? And so to get into this kind of unprecedented times, people are bracing for a recession. And so Ryan, pull this up for me here. Behind the scenes, while we had this rally last year, yields actually finished the first month since July positive. Thank you to our man Markets and Mayhem for the data today. Yields had their first positive month holistically across the treasury markets in the first month since July. And so what does that show us? People are finally buying into the safe haven of the debt market. Whereas for most of the year this year, we saw risk off in both the debt and stock market. People wanted nothing because if you have upcoming interest rate hikes for the foreseeable future, why would I buy these bonds yet? I'm going to wait until we get some outlook on where this terminal rate might be into next year, when they're planning on beginning to slow down hikes. And that's when I'll try and catch the falling knife, right? People are starting to catch this falling knife. And so if we move over into even TLT, right? TLT last month had the second highest inflow in history, right? The second highest month of buying ever into TLT last year. And so I think we're getting to this point now where for most of the year, we saw that 10-year yield was pretty much an inverse of the stock market, where if bonds were getting sold and yields went up, we saw that pressure stocks. Now I think we're going to get into the contrary, where it's probably going to have a direct relationship with bond prices being your inverse, where people are reallocating assets out of the stock market back into this safe haven in a recessionary prevention method, right? People want to be in the safe asset here as we get into these unprecedented times. And clearly, no matter what the Fed is doing, they can't seem to slow down the economy. So eventually people are thinking, they might have to take really drastic measure here to tackle inflation. And I want to be out of stocks and I want my guaranteed money here in the debt market while they do so.
Right. I was just about to say, to wrap this up, I think that, what you say when we have these record inflows, that kind of creates a negative tailwind for stocks, right? Because you have a situation where you look at the risk-free and you're like, should I take this risk-free money here, or should I go ahead and YOLO into AMC or something like that? I should probably take this risk-free 5%. It's good.
I was going to say, I think for a while, people were like going to see how high yields could go. Eventually, like the 10-year got to almost 4.5%. And I'm sitting here thinking, how high is this going to go? Now, as we start to roll over, I think it's really giving FOMO to people where they might have missed the top of yields. And now as stocks continue to roll over, as they're doing right now, they're like, I'm going to take this while I can. Who knows how much they're going to retrace.
Right. Absolutely makes sense. All right. That's going to do it for us on Fed Forecast. We'll pass it back to Alejandro.
All right. Thank you, gentlemen. Now it's time for the system. So for those of you that are new to the show, who are unfamiliar with the system, this is simply my tool that I use in order to trade the S&P. So let's talk about what we've seen so far this week, and then I'll get into what we can expect headed into today. So we, of course, got the sell signal. And after the sell signal, which is the bearish cross of the 10 SMA below the 50 SMA, on the 30-minute SPX chart, we got a massive 100-point sell-off. Now, I'm still currently short. I'm in some runners. I'm out of the majority of my position. But it's very, very important to note, guys, once we break below the 50 SMA, and we saw the 10 SMA continue to serve as trend resistance, bulls did not stand a chance. And so taking profits at the close on Monday was important in order to take some off the table, be able to remain in the trade if there was any overnight volatility, because I'm, of course, trading the futures. And that's exactly what happened, right? There was a little bit of a bounce overnight, but I was able to stay in the position. And then yesterday, guys, we continued to get that massive sell-off. 39.40 was the real support that I was looking to hold, because that was the demand zone where we were kind of coiled up prior to launching last Wednesday when J-Pow spoke. So now, going into today, what is it that I'm looking for? What is it that I'm sort of expecting to happen? We know that our take profit rule is take profits when we're 100 points or more extended from the 50 SMA. So for me, that doesn't necessarily close the entire position, but I want to be out of the majority of the position, and I want to be comfortable with, hey, if this thing bounces, it goes against me, I'll get stopped out. Obviously, in profit, the trailing stops will hit. And if not, if the market continues to flush, I want to be part of that move, right? And so again, just in runners, but remembering that take profit rule, 100 points or more extended from the 50 SMA, can likely come into play. So as far as opening a new short down here, I'm not interested in that. But the mindset is continue to short the pops, okay, for as long as we're trading below the 50 SMA on the 30-minute SPX chart. So any sort of retracement, any sort of bounce, for as long as we're trading below that 50, is, in my opinion, an opportunity to short. And that's confirmed by the 1-hour SPX chart, guys. Look at what happened when we got the sell signal yesterday on the 1-hour SPX chart. This just confirms that move lower, showing us that the two time frames, when they are both telling the same story, that is extremely, extremely powerful. That is when we see those big moves. That is when we see that massive trend lower, like we've seen the past 2 days, guys. All right? So that's going to do it for the system. I'm going to pass it over to Ramsey now, who's going to give us Bet the Bell. Ramsey, what's going on?
What is going on, guys? So we got a big Bet the Bell segment today, and I'm starting to feel that Bet the Bell is becoming a little bit more important on this Beat the Bell show. We just had our first market moron come from Bet the Bell, my very own segment. So the guys are ready. They're really studying up. They're making sure that these answers are no joke and the real deal. And with that being said, we're going to talk about just a couple minutes about our Bet the Bell market moron on Monday. As many of you guys know, Stock Sniper was given that accolade as the first market moron from Bet the Bell on a little bit of a blunder. And then what did he go ahead and do Monday morning when the market opened? Absolute ripper. Are we eating bags or not? SPY, 403 puts, $55 a con, scaled out at 100%. Had some runners for 3, 4, 5. Snipe, how far did they go? Take the cake here.
Talk your shit. 760%. But first off, I want to talk about that Bet the Bell segment, right? This is the first time in Beat the Bell history where the market moron actually was right. So I'm not going to lie to you guys, right? I was looking off into the distance. I'm thinking, like, what am I going to eat for lunch today? Something completely unrelated. And then I get asked, what do you think about XOM? And I have a vague memory of what XOM looked like, but I don't have the chart in front of me. And so I'm like, okay, I think the chart looks pretty nice, and I think we're going to see some buyers come into XOM. Then guess what XOM does that day? It gets eaten up. So I was right. So the first time in market moron history, the market moron was right. So I guess you should call me market genius or something. But then I come out 760% out there.
Yeah, I love the banter. I love the trade. I love the determination to come back from that market moron, or the resiliency in that trade. But listen, my man, let's put it behind us now. We're ready to move on. You got what you had to say. You spoke to the world. It is time to move on, which leads me into my first question, Snipe. We're going to start with you. Green or red today? The people want to know.
I think we have to be green today. The reason why I'm going to have to go with green is just because we've seen a lot of selling this week so far, and I think we just might have a little bit of a relief bounce today.
Gotcha. I like the answer. Very bearish on the Fintwit space. Maybe go in the other direction. Money Mander, talk to us.
Red. I'm taking red. I'm thinking just from a technical standpoint, everyone's looking at the charts, but beyond that, me and Diamond kind of covered this VIX rally out of demand last week. This is really when you see your aggressive rollovers, when VIX rallies out of that demand around 20 up to 25, even say, and then maybe we cool off. But I'm thinking we definitely close red today.
I like it. All righty. Next question. So I'm sure everyone knows, and if you don't, you must be living under a rock. We have some very viral charts surfacing all over the Fintwit space. We got this daily rising wedge break on the S&P 500. I posted a funny chart yesterday on my Twitter with the break of this wedge and a little emote of the Grinch possibly coming in to burn down this Santa rally. Although we did close below this wedge support yesterday, it's still a little bit too early to completely tell. We might retest before rejecting even further, or we might reclaim and head higher. So what I want to know from you guys is this rising wedge on the daily the real deal, or is it a false break? I want to start with Dipka.
Yeah, that's a good question. And I posted about this yesterday. I have some content for us on my top watch, but I'm actually expecting I think it's legit. And I'm expecting a retest of the trend line today to give us our confirmation to head lower. So I think this is very legit. This is about as legit as it gets. Remember, no one wanted that trend line when it was when we had the fake Powell pump last Wednesday. So retail is not playing it, right? That's the perfect time to get in, right? We head lower, we break the rising wedge, we fill the gap at 408, we reject the overhead trend line. This is a perfect storm for tax selling season to kick in right now. Now we have a gap to fill at 380, which I think we're going to head to. So I think this is very legit. I still stand by the Santa rally belief, but remember, that's not until the last week of December and the first week of January. So the rising wedge is legit.
Gotcha. Noah, let's hear it.
I'm going to have to agree with Coach here. I think that, we got to close below the trend line. If you want to play it technically, you have to look at you have to do what the charts say, right? And this goes exactly to Coach's point. If you're going to play technically, if you're going to trade trend lines and whatnot, like you have to actually do it. Like when we get it close below your trend line, you have to actually short. When we approach that trend line resistance from the underside, you have to actually short. And so, I mean, that's what I'm looking at right now. It looks like a close below, and it looks like we're going to head lower in the short term.
Yeah, it's really hard to disagree with both those points. Alejandro, finish it off for us.
Yeah, I mean, I think it's legit. The market has clearly lost steam. The difference is seeing the trend. So a lot of the selling that we've been seeing as of late has kind of been slow, choppy. The past 2 days, very, very clear what's going on here, guys. There's a lot of people selling a lot of stock. Now, I think the only thing that can really save the market into the end of the year is that CPI print that we're going to get on the 13th, I believe, either the 12th or 13th, and then, of course, FOMC. But right now, I think that wedge is legit and that the market's going to trade lower.
Yes, good point. CPI next Wednesday, I believe, Wednesday morning. It might be Tuesday, the 12th or the 13th. Not exactly sure. We'll get on that, which leads me into my last question. So we had some breaking news on Monday morning. I'm sure all of you know. And no, I'm not talking about our manufacturing data. I'm not talking about a Fed speaker. I'm not talking about Elon or Neuralink, whatever you want to talk about. I'm talking about the greatest inverse indicator in the history of the stock market. Jimmy Cramer urges investors to sell their crypto. Guys, are we buying off of this news? Money Mander, I know your brain's moving right now. Well, are we buying? Like, what am I buying?
This is a really tough one because I'm a huge advocate of the inverse Cramer here. But this one, I'm still not buying. I'm still not buying here. Bitcoin has not broken out of this bear flag that still seems to hold. I think eventually, whether it's this year, next year, this week, next week, I don't know. Eventually, we're going to see fallout from this FTX thing holistically through the markets, and that bear flag is going to crack. So, again, I hold to my narrative, 4 digits, I'm in Bitcoin, but until then, I'm not.
I will say thank you, Kramer. Bitcoin is down 75% on the year. I thank you for telling us to now sell our Bitcoin. That is a great take. $2,000 off of our yearly lows as well. Hondo.
Yeah, I mean, that's almost as bad as coin, right? He was saying to buy coin. We like coin at 400, I remember he said on the day of the IPO. Dude, I mean, honestly, I think it's worth a stab. It's worth a stab. Crypto's down a lot. Bitcoin's down a lot. You said 75%. The guy literally sells at the bottom. I mean, it's undeniable at this point. You can't even make it up. You can sit here and say, oh, this, that. I mean, the guy buys the top and sells the bottom. He's having one of the worst years. Also, I mean, he's, everything he does is public, right? So all his opinions are public, and, it's a tough market. So you got to cut him some slack. But with that big of an audience, this guy is just making himself out to be an absolute idiot this year. So I think it's a good enough reason to buy, quite honestly.
Yep. You made a good point. I mean, the guy enters the arena. You got to give him
He
that.
enters the arena. That's right.
Yep. Noah.
I'm going to go with yes. I think I would start to dip my toes in down here, not only because of the Cramer thing, but I think when you have a situation like with FTX where, everyone is so scared, that really, to me, seems like the time to start getting involved. And I think that's where we've gotten to right now, right? Nobody really knows what the fallout of this FTX thing is going to be, several months down the road. And I think that's really making some people apprehensive. For me, who hasn't had any crypto the entire year, it seems like maybe the time to start dabbling. So, yes, I'm a buyer.
Love it. Dipka.
Yeah, I'm not on board. Although Kramer's a great fade indicator, times are tough right now in the market, in the economy, and dabbling in really risky assets just not for me. I'd rather put my money in some of the boomer stocks and things like Apple that are going to perform, that are going to be the most recession proof as we roll into 2023. I think 2023, it might get off to a tough start. So crypto is not where I want to be sprinkling my money right now.
And last but not least, Snipes, lead us off with a bang.
I don't really like crypto right now. I think I'd rather go down to the gas station. I'd rather buy $16,800 worth of Powerball tickets, even though we do have this Kramer indicator. I don't really like it still. Might like Bitcoin under 10K.
Gotcha. Thank you, brother. That doesn't mean go to the gas station and funnel into
Yeah, not financial advice.
Do not full port into Powerball tickets. All right, guys, that does it for Bet the Bell. Hondo, take it back.
All right, Coach, you ready? Coach's Corner. Let's get it rolling.
Let's get it rolling. So there have been leaked reports of some Mander slander against my name coming out. We are getting
We gotta rename this segment, dude. We gotta rename this segment.
We are getting ahead of the propaganda here. Ryan, could you please roll the tape? Yeah, and I can't lie. Like as strongly as I had felt coming in about the Santa rally, we did move significantly higher pretty fast right into this trend line. And I will say, sometimes the fast moves, right? Think about it like this. Everybody wanted that trend line last week, 2 weeks ago, right? Then it comes, but it came so quickly that now all of a sudden it doesn't look so good to retail traders, right? Now everyone's scared to take it, which makes me kind of believe that it's actually going to hold here. But we're going to find out in the next couple of days, maybe today or, coming weeks. So we'll know the answer to this sooner rather than later. I will say I'm not as confident about, the breaking of this trend line as I was about the Powell pump on Wednesday.
All right, so let's get ahead of him getting ahead of himself. I really had nothing planned for today, but I'm glad I was able to scare Coach yesterday, talking that I was gonna have a segment here for him today. So let's see what you have to say, Coach. I'm glad I got a little real estate plopped up top there. All right, even better. It was not meant to be. No one wanted to hear from Coach today.
I know. Hopefully we'll be able to return to that later on in the show. If Coach Dipker can get,
I don't think we'll have time.
His stuff figured out there. Oh, it's Mander's Corner now.
It's Mander's Corner now. That's going to wrap us up. I don't think we have time for whatever he had to say.
Yeah, it's all right, guys. We're going to go ahead and move over to today's top watches now, powered by TrendSpider. We're going to go around and ask the head traders what it is that they are taking a look at headed into today. Coach Dip, I see him laughing now. I don't know if he's ready to go or what's going on there.
You guys tell me. Looks like Mander's trying to hack the system and keep us from, slandering the lizard name. Listen, all I really want.
All right, let's go back to it. Let's go. I think you're okay now. Let's go back to Coach's Corner.
So, yeah, you saw the clip, right? And I've been getting a lot of heat coming out of last week. Obviously, I was pretty bulled up into Powell, right? I was bulled up into Powell. So, we looked for that 40-50 target on ES. 40-50 was taken out. And you clearly see on Monday, as a day trader, you have to be nimble. You have to be able to adjust on the dime. And that is what I did on Monday. So whatever propaganda is put out on Beat the Bell on Friday, just a heads up, it's probably going to be very select edited clips to make it look like I was totally wrong about this, when in reality, I was calling for this trend line to hold on Monday, right? Now, let me be clear about my thoughts. And I could be wrong, but on Monday, I said that I expect that trend line to hold. Tax selling season is going to take place in early December by my beliefs, just like we saw last year. Now, does that invalidate the Santa rally? No, the Santa rally takes place the last week of December. Okay, so I'm thinking we sell off this rising wedge. We fill the gap to 380, and the end of the year, we can get a little squeeze to retest this 400 level. Okay, so those are my thoughts going forward. And I'll pass it back to Alejandro. If we'll come back to me on the top watch, I'll pull up my charts.
All right, guys. Thank you, Coach. Let's go ahead and move into top watches now, guys. We're going to start with Stock Sniper. Snipes, what do you got for today?
Pretty interesting. I got 4 levels for you guys. As you can see, I have the chart right here. Maybe not the chart right here. The 4 levels that I'm watching is 394.50, 393.65, 392.75, and last but certainly not least, 391.98. Now, this 391.98 level is a pretty nice bounce level. We can look at historically off the start in the last time that we were in this range, but we can see right here on the previous day, we can see multiple bounces off of 391.98. This level looks like a very nice level for me to add calls. I will be looking for this today. If I could see us hold above the level and we can look for a little bit more confirmation, then I will hammer some calls.
All right. Thank you, sir. Dipka, what do you got?
So we're going to pull up the chart here. I have this rising wedge, obviously, that everyone's been posting. I know it's probably getting a little bit overdone, but I think it's important. We rejected the overhead trend line, and the rising wedge is starting to break out. So I wanted to map out for you guys the 381.14 gap fill. Okay, 381.14 gap fill, pretty clear. Looks like what I'm really expecting is, or hoping for, is a retest of the trend line today, which would mean we have a nice green day. That might be a little bit of wishful thinking. If we do get it and we confirm the hold, we have a nice clear gap fill to 381.14, which should get filled in the coming days. So 381.14 is my target for coming days. This would only invalidate if we really cleanly broke 400 to the upside. I want to actually see 397 retest today and reject to give us that trend line break confirmation. Thank you, guys.
All right. Thanks, Coach. Noah.
What's going on, guys? Top watch is going to be NVIDIA today. The stock rallied 60-ish% in about a month and a half. It looks like it's ready to cool down just a bit. If we can break this lower trend line, I'm looking for 150, 155, and then 150 as support. I do like it to the long term into like January, but I think shorter term, if we can break that trend line, we may be able to pull back within this broader uptrend.
All right, Money Mander.
A lot of great setups out there right now. I'm watching Amazon. Honorable mention to the one Ramsey's giving out in a second here. End phase is also on my downside watch, but Amazon, a really great H pattern here on the daily. I'm looking for this to fill the gap to year-to-date lows. Ultimately, if that doesn't hold, you have COVID low actually coming up at like $81, which is unfathomable, honestly, for Amazon, which was one of the biggest companies. And then under that, you would have a measured move down. If COVID low can't hold, a measured move all the way down to the 2018 December low, around like $68. So I don't know. Amazon burned into the ground here. I'm initially watching gap fill to 86 though.
All right. Thank you, sir. And then last but not least, Ramsey.
Yeah, so very similar to Money Mander, and I got to give it to him. He gave me this this top watch last night. So we got Microsoft daily chart here, retest of the 382 fib, 244.28, and this rising wedge formation on the daily as well. So what we're looking at right here is if we get a close under this rising wedge support, I mean, I really don't have much until 232 and 225 gap fill. And just like Coach said, I'm not sure if his level was 38.14 on SPX, but I have that same gap fill level at 37.48 on SPX. It's that same gap up area. I believe it was November 11th or November 12th. If we crack this support, rising wedge, I'm looking for 225 gap fill on Microsoft, and exact same thing on the indices.
All right. Thank you, fellas. We're going to close out the show now with Coach Dipka, who's going to give us Dipka certified levels for the day. Quickly, Coach, what do you got?
Yeah, thanks, guys. Sorry, we had some connection issues, but we want to get you your levels. I know you're still in bed, half of you, and you're like, wow, Coach Dipka is not showing the levels. I'm fucked today. So we're going to get the levels pulled up, and we'll get right into it. Last week, or on Monday, we talked about 405. Now, look at the beginning of that chart. 405 retested perfectly on Monday. You see that big gap, 405 retest, reject, beautiful level. That was our top watch for Monday. Now I got something similar for you today. Watch the retest of this 395 to 395.75 zone. Okay. You also see we labeled out that 400 level. Look at that break, hook, retest of 400 before the massive sell-off, right? So those are the two levels from Monday. I'm not saying we're going to get a massive sell at 395, but I think it's good for a day trade. I'm looking at that zone for a short into the open. Now, what supports do I want to see hold? I want to see 391.64 hold. That's a fib retracement on the daily chart, which actually was low of day yesterday. That was low of day yesterday, so it's going to be a big level. You have a fib and a low perfectly in line, literally almost to the set there at 391.64. We also have another fib below, a 50% retracement, one of my favorites at 390, just about 390, which is also a massive psych level on the daily chart. So those are going to be the two supports, watching 395 to 395.75 for a rejection. And then over that, really don't want to see this get over 400 for that rising wedge to be valid. But that's it for the daily levels, guys. Done perfectly in 60 seconds, as always, not a second over. And we will close out the show now with Dwayne trades to put you guys in the mood to absolutely not trade.
Thank you guys for joining us for another episode of Beat the Bell. We love doing this, guys. I mean, I feel like we're in full swing now doing these shows. For those of you that are new, every Monday, Wednesday, and Friday at 8:30 a.m. Eastern Time, we are live right here on Twitter, on the Kane Capital YouTube, and on Twitch. We appreciate you guys tuning in. We appreciate you guys liking and subscribing to the YouTube channel. That helps us out a ton. For those of you that don't know, we have 7 head traders trading live all day long in text chat in the Kane Capital Discord. If you're interested, you can come watch us trade alongside with us by going to kane-capital.com. We'll see you guys in the Discord. Have an awesome trading day, everybody. Let's crush it, and we'll see you back here on Friday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.